Hello everyone, welcome to my YouTube channel. In this video, I'm going to teach you company accounts, issue of shares, and the topic is issue of shares for consideration other than cash. The targeted learning objectives are, after going through this topic, you will be able to understand the concept of issue of shares for consideration other than cash and its accounting treatment. So let's start the topic of issue of shares for consideration other than cash. It is not necessary to issue the shares for cash only. A company may issue fully paid shares for consideration other than cash in the following circumstances. One thing is very important which you should remember is that whenever a company issues shares for consideration other than cash, then these shares are always fully paid shares. These circumstances are: number one, issue of shares to promoters. Now, who are the promoters? They are the persons who created the company, made all efforts to start a company. Promoters of the company may be issued shares in the company for the services rendered by them. The entry will be incorporation cost or formation expenses account debited. Now why? Because this is the expense for the company. Company is issuing shares to the promoters, but it's not receiving any cash amount in return. So it's an expense for the company, and this expense will be written or debited in the name of incorporation cost, or we call it them as the formation expenses. So, incorporation cost or formation expenses account will be debited to share capital account. Why share capital account credited? Because shares are being issued, so share capital is being formed. Narration will be shares issued to the promoters. So, company is rewarding the promoters by giving them the shares. Second situation is issue of shares for purchase of assets. Sometimes the company purchases some assets, and instead of making the payment to the vendor, now who is the vendor? Vendor is the seller. Seller is known as the vendor. So instead of making the payment to the vendor in the form of cash, it issues fully paid shares. Remember, fully paid shares. So fully paid shares to the vendor. So following journal entries are made for this purpose. When assets are purchased from the vendors, then sundry assets account debited. What comes in is the assets. So sundry assets account debited to vendor account. Now why vendor account is being credited? Because here the vendor is the creditor from whom the company is purchasing the assets. So it's not making any cash payment to the vendor. That's why vendor account has been credited. Second is when shares are issued to the vendors. The moment the company issues the shares to the vendor, then vendor account will be settled. When you created vendor account, it was credited. Now at the moment of settling this account will be debited. So vendor account debited to share capital account. Company is not making any cash payment to the vendor. I have not written to cash account. What we have written is to share capital account, because company is issuing the shares to the vendor. So share capital of the company is being formed over here. So there are instances when a company enters into an arrangement with the vendors from whom it has purchased the assets, whereby the latter is the vendor, agrees to accept the payment in the form of fully paid shares of the company issued to them. Normally, no such cash is received for issue of shares. These shares can be issued either at par or at premium, and the number of shares to be issued. Now, this is again a very important thing. Number of shares to be issued will depend upon the price at which the shares are issued. So, number of shares will be calculated, and this calculation will be based on the price agreed upon, the price at which the shares are issued, whether these are issued at par or at premium. So as per the issue price, number of shares will be calculated and the amount payable to the vendor. So this amount payable is actually known as the purchase consideration. So this is the amount which a company is liable to pay to the vendor for the assets purchased from him. The number of shares to be issued to the vendor will be calculated as follows. So the formula is number of shares to be issued is equal to amount payable. I have told you what is amount payable. Amount payable is the purchase consideration. So instead of using the word amount payable, you can use the word purchase consideration also. So purchase consideration or amount payable divided by the issue price. So this is the formula. Now this thing will be more clear to you with the help of this example. Rahul Limited purchased building from Handa Limited. Handa Limited is the vendor. Rahul Limited is the buyer. Handa Limited for rupees 5,40,000 and the payment is to be made by issue of shares of rupees 100 each. So this is the face value of the share. Rupees 100 is the face value of the share. The number of shares to be issued shall be worked out as follows in different situations. Situation number 1. When shares are issued at par, that is at the face value, and the face value of the share is rupees 100 in this case. So number of shares to be issued is equal to purchase consideration divided by the issue price. So what is the purchase consideration in our case? It is rupees 5,40,000. Rupees 5,40,000 divided by the issue price. This is the case of issue at par. So issue price is rupees 100. So number of shares is equal to 5,400. Second situation, let's take the second situation when shares are issued at premium of 20%, that is at a premium of rupees 20. 100 is the face value and 20 is the premium amount. So the total issue price is rupees 120. So how to calculate the number of shares in this case? Again, same formula will be used. Purchase consideration upon issue price. Purchase consideration is rupees 5,40,000 and issue price is rupees 120. So 5,40,000 will be divided by 120 and number of shares are 4,500. Now how to pass the journal entries in this case? So entry number 1 will be, we are making the books of Rahul Limited. Books of Rahul Limited. So entry will be building account debited because Rahul Limited purchased an asset name as the building from Handa Limited. So to Handa Limited credited and the purchase consideration is 5,40,000. Narration will be building purchased. So debit what comes in? Building account debited. To credit the giver. Who is the giver? The creditor is the Handa Limited. Purchase consideration is 5,40,000. So case number 1, when shares are issued at par, our entry will be Handa Limited debited. Now we are settling Handa Limited's account. So at the time of passing second entry, vendor account will be debited. It will be closed. With which amount? Always remember, with the amount of purchase consideration. Whatever may be the situation, issue at par or issue at premium, vendor account will always be debited with the purchase consideration amount. Okay. 2. Share capital account. Now we'll consider the amount or the number of shares to be calculated. I have already told you, but still I'm going to revise this concept with you. How many shares? Number of shares is equal to purchase consideration divided by the issue price. Issue price is rupees 100. So number of shares is 5400. So 5400 shares issued at par. Now how to write the amount in share capital account? Your number of shares 5400 multiplied by now in this case this is share capital account, and share capital account always consider the face value, and the face value of the share is rupees 100. So your amount will be 5,40,000. Now the second situation, case number B, when shares are issued at premium. When shares are issued at premium, then what entry is to be passed? Handa Limited is the vendor. Vendor account will be closed. It will be debited with purchase consideration amount always, whatever may be the case. 2. Share capital account. Now what amount will be entered over here? I'll tell you after some time. First of all, we'll write the entry. Amount will be written later on. So to share capital account, to securities premium reserve account. Now this amount will be calculated on the basis of number of shares. So first of all, we need to calculate the number of shares. So number of shares is equal to purchase consideration divided by the issue price. Issue price in our case is 120. So we'll calculate the number of shares. Number of shares is equal to 4500. So 4500 shares issued at a premium of 20%, that is rupees 120 per share. Now how to write the amount in the share capital account and securities premium reserve account? This will depend upon the number of shares. Number of shares is 4500 multiply. Share capital will always consider the face value, and the face value of shares is rupees 100. So our amount will be 4,50,000. And securities premium reserve, again calculation will be based on the number of shares. Number of shares is 4500 into the premium amount is rupees 20. So 4500 multiplied by 20, it's equal to 90,000. So this is how we write the amount. Every calculation will depend upon the number of shares. Share capital will always consider the face value, and premium amount will be multiplied by the number of shares. So this is the calculation for second case. Now we'll discuss another question. Jindal and Company purchased a machine from High Life Machine Limited. So High Life Machine Limited is the vendor. For rupees 3,80,000, as per purchase agreement, rupees 20,000 were paid in cash. So certain amount was paid to the vendor and balance is rupees 3,60,000. Balance is 3,60,000 by the issue of shares of rupees 100 each. So 100 each is the face value. What will be the entries passed if the shares are issued at par or at premium 20%? So solution will be, number of shares will be calculated as follows. When shares issued at par, again our purchase consideration in this case is 3,60,000, not 3,80,000. Why? 3,80,000 was the total amount of the asset, but 20,000 has been paid in cash. So how much is left? 3,60,000 is the purchase consideration. So purchase consideration divided by the issue price is rupees 100 in case number 1, number of shares 3,600. Case number B, when shares are issued at premium, purchase consideration divided by issue price, that is 120, number of shares is equal to 3,000. So how to pass the entries in the books of Jindal and Company? Jindal and Company is the buyer. So Jindal and Company Limited, this is the books of Jindal and Company Limited. Entry will be, first entry, machine account debited to bank account, because certain amount has been paid, and the rest of the amount which is not been paid will be written in the name of the vendor. Vendor is High Life Machine Limited. So the price of the machine was 3,80,000. 20,000 was paid in cash, and the remaining amount, that is the purchase consideration, is the 3,60,000. Narration will be, machine purchased and rupees 20,000 paid in cash, and balance paid by issue of shares. So this is our entry number 1, books of Jindal and Company. First entry. Second is, as per the case number 1, when shares are issued at par. So when shares are issued at par, our entry will be, this is our second entry, vendor account will be closed. So High Life Machine Limited debited. Always remember that vendor account will be debited with the amount of purchase consideration. This is the case of par. So to share capital account. Now how to calculate the number of shares? Number of shares is equal to purchase consideration, that is rupees 3,60,000, divided by the issue price. In our case, issue price is the face value, rupees 100. So number of shares is equal to 3,600. So 3,600 shares issued at rupees 100 per share. So share capital amount will show number of shares 3,600 multiplied by the face value, that is rupees 100. So amount will be 3,60,000. Case number B is, when shares are issued at premium. So entry will be vendor account debited, that is High Life Machine Limited debited with the amount of purchase consideration always, that is 3,60,000, to share capital account. Entry will be written but amount will be written later on, to securities premium reserve account, because this calculation will depend upon the number of shares. So we'll calculate the number of shares. Number of shares is equal to purchase consideration divided by the issue price. In this case, issue price is rupees 120. So number of shares is equal to 3,000 shares. So 3,000 shares issued at rupees 120 per share. Now how to write the amount in the share capital account? Number of shares 3,000 multiplied by the face value. Always remember, share capital will consider only the face value of the share. So amount is 3 lakh. And for securities premium reserve, again number of shares multiplied by the rate of premium. Rate of premium is rupees 20. So it comes out rupees 60,000. So 60,000 will be written in securities premium reserve account. So this is how the different cases are dealt with. I hope this topic is very much clear to you. Thank you so much for watching.